Today on For Pete's Sake, we're going to be taking a look at the ECB and FOMC meetings, along with other things that might be affecting gold. Coming up. And of course, joining me today is Peter Hug. Pete, how are you?
I'm doing well, Alex. How are you?
I'm fine, thanks. So this week, Pete, FOMC, ECB meetings coming up. What do you see coming out of them?
I don't expect too much out of the FOMC. Some of the recent economic data has been slightly weaker. But again, I hate sounding like a broken record. I just do not see the Fed tightening up on monetary policy, at least until first quarter of 2014. And my guess is it may even go further, possibly the latter half of 2014 before the Fed gets aggressive and stops its easing policy. On the central bank meetings out of the EU, I think there the storylines may have a more dramatic effect on the metals prices. It again, and I've been saying this for a while now, it appears to me that that the EU is really going to have to throw in the towel here and start to become much more accommodative, as opposed to their program of austerity that they've been on for the past 6 months. The European economy just does not seem to be getting any traction, and I would suspect that they're going to drop their key interest rate by 25 points on Thursday.
Now, you still think there's a level of fear that's coming out of Europe?
I think there's less fear from the big money. And the reason I say that is when you've got a level of fear, one of the segments of the market that tends to get hurt the worst is the financial segment, and the banking segment of the European bourses, whether you look in France, Germany, or even the UK, have actually been doing fairly well. UBS came out this morning and posted a $1 billion profit in the latest quarter. So the banking system indicates to me that we may be entering into a sort of a flattening phase in the Eurozone economy, but I don't think it's going to pick up unless they become more accommodative on their monetary policy.
All right, Pete, in your daily market note, you mentioned the strong performance of PGMs recently. What do you attribute this to, and where do you think they might be heading?
Well, the Russians came out, and I think I wrote a blog on this. The Russians came out probably about 6 weeks ago, indicating they were looking for an OPEC-style cartel with South Africa for supplies on the PGMs, which I indicated would be very bullish. But recently, there's negotiations with the South African miners. It's yet to be decided whether or not they'll get the packages that they're looking for, and if they don't, there's suspicion that they may go on strike again. South Africa has chronic electricity problems, so supplies are always a question in that market. If we put a trade on about 3 weeks ago when platinum was trading at about a $40 discount to gold, it's now trading at about a $50 premium to gold. I like that trade. I like the long platinum, short gold trade. But I do think if the economies get any type of acceleration that looks like it could be sustained, and I still think that's premature, but once that happens, the PGMs are, in my opinion, highly undervalued. We have long said that any price point under $650 for palladium was a buy. We had that opportunity again last week, and today again it's over $700. Rhodium again hasn't moved as quickly, but when it does move, it will move quickly. There is some underlying support at these levels, 1150, 1250 range. I think rhodium over the next 5 years is probably going to be one of the best yielding investments that are in the metals markets today.
Okay, Pete, with the recent volatility we've seen in the gold market, where do you see gold short term?
We expected, we went long the gold market, as most of the listeners know, in the low 1300s with trailing stops all the way up. The stop is currently at 1454. The market feels heavy to me here. It doesn't have the momentum. And I'm not bearish, but I'm very cautious on this market. And one of the reasons that I'd like to see us get through this week is not only the potential news that'll break from the FOMC, but also the European central banks. But the other issue is, it sounds trivial, but we have a fairly significant holiday coming up with May 1st. The UK markets are closed. Some of the European markets are closed, and the Chinese market is closed. So if the physical offtake that we've seen over the last 2 weeks sort of diminishes, which I expect it would in the holiday, and the funds in the U.S. continue to sell, the ETFs continue to redeem, there could be some short-term pressure, which could take gold down into the 14, give or take 27 range. So I'm cautious right here. I wouldn't be aggressively long. I'm still waiting for a break over 1477 on a close basis before I'd venture out to a 1520 target.
And what do you think about silver?
Silver's trading. I'm watching copper. Copper breaks down below 320, it hits silver. If copper stays above, yesterday it rallied above 320 and added 60 cents to the silver price. Silver is fairly valued here, I think, given where gold is. But it has the potential, if gold does break down, to see the low 23s again, possibly the high 22s. Silver is not as widely held right now as gold. I know there's major demand in the United States for eagles, and again, I'm still beside myself that some of the dealers are still out there charging $10 premiums on eagles, and people are buying them. Again, it's totally illogical to me. If you're going to buy silver, if you can afford it, try to buy the larger bars where the premiums are much more in line. But silver right now, I'd wait. If gold breaks up through 1477 and attempts the 1520 level, I think silver's good for at least another $2. I'd reassess it in the 2620 range if gold got up to the 1520 range.
Well, that was perfect, Peter. Thank you for joining me.
You're welcome, Alex.
And thank you for watching this edition of For Pete's Sake. If you have any questions or comments, please don't hesitate to send them to newsfeedback@kitco.com. Also, Kitco News will be attending the Metals and Minerals Investment Conference in New York City, May 13th and 14th. If you'd like to check it out, please follow the link below. Also, you can follow the conversation at Alex_Letourneau on Twitter. Thanks for watching.